If you look around the world today, there are about 2.5 billion ounces of gold and over 1 billion tons of copper metal tied up in deposits in the wrong places.
Welcome back to Liberty and Finance. We have a returning guest and a new guest with us today. Rick Rule is the CEO of Rule Investment Media. And we also have Mark O'Day, who is the founder of Oxygen Capital and an architect of 9 public companies. Rick and Mark, thank you for joining us here on Liberty and Finance.
Pleasure.
Thanks for having me.
We wanted to have you on together because for our audience, it makes a much richer discussion when we get multiple visitors who bring different perspectives to a topic of high interest to us all. Our viewers are very interested in sound money, gold and silver, and they're also interested in the potential for how they're going to protect their families' financial futures, given the amount of uncertainty and risks that are facing us all around us in this environment. One of the things I'd like us to talk about together, kind of in stages, is inflation. We've had John Williams from shadowstats.com on just last Friday talking about the real burgeoning rate of inflation that's unacknowledged by the Fed, even though they're now starting to have to admit that their 1% numbers were not reflective of what was really going on in people's lives, and that in fact things are going to be much hotter for some period of time. And another topic that's related to that is the commodities supercycle. And we've had Pamela and Marianne Aiden from the Aiden Forecast on. We've had others talking about the evidence that for some time now and for some time to come, we're expecting that there will be a huge outpaced preponderance of emphasis on commodities and commodity pricing kind of being this next phase that we're going to be in our economy. And then we want to talk about one of the standouts in that commodity supercycle being copper. Why is that the case? What does it mean? And how is it that that has something to do with several of the companies, Mark, that you've been an architect of? So can we take it back to the beginning? And Rick, could you just give us a brief intro of Mark as our guest, since you've worked with him longer than I have, and would love to know why our audience should realize how privileged we are to have him here.
Well, I'm going to do part of it and make Mark do the rest. Mark came to my attention as a young, or rather I should say younger geologist when he entered the Goldcorp Challenge many years ago and did extraordinarily well. And as a consequence of that, founded his first public company. I was lucky enough to participate in a 50-cent placement in that company early on in its genesis. And if my memory serves me correctly, we cashed out several adventures later for some number. Mark, am I correct? North of $20 from that 50-cent base?
It topped out at 14 was the takeover price, but we did get to 18, I think.
Yep. I mean, it was let's just say you got my attention.
Yeah.
And you have been part of numerous adventures since. Perhaps, Mark, you could take us through a little bit the genesis from being a toiling geologist to being the founder of 9 public companies, and talk about briefly some of the successes and some of the failures that you've enjoyed.
Well, thanks, Rick. Yeah, you and I go back to 2001 or 2002 when I first started in this business in the public company side of things. And I kind of made a transition from an academic bent to a commercial bent. I finished my PhD and did a postdoc and was sort of earmarked to get into a teaching career, and just wasn't a good fit. It was kind of like a sweater that was too tight. You know, you just got to take it off and go in a different direction, which I did. And so I got behind, or people got behind me in a company called Frontier back in 2001. I knew nothing at all about running a public company. I knew a lot about rocks and how ore deposits form and that sort of thing, but figured I could build a team around me with the support of some mentors behind me, Rick being one of them, to have a shot at this. And so, 10 years later and many adventures along the way and dead ends along the way that needed to get restarted, we ended up selling Frontier to Newmont for $2.3 billion after the discovery of what is one of the highest grade open pit gold deposits in Nevada called Long Canyon. And that hit commercial production in 2016. Along the way, we created a uranium company called Aurora, with some other Newfoundland friends of mine called Altius. And we had a 50-50 joint venture, which morphed into a separate public company called Aurora, which I was CEO of. And we had an amazing run when uranium hit $130 or $130 a pound, sorry. And all the hedge funds got into it and really drove that. And we had the 10th largest uranium deposit in the world in coastal Labrador, back in my home province. So it was great being back there working on the coast of Labrador. Uranium sort of fell out of bed, the GFC happened, and we had to pull Aurora back into incubation mode, and then sort of relaunched it a couple of years later and sold it to Paladin for, I think, $250 million in Paladin stock. And then that sort of was the end of generation 1.0 of the companies that I was involved with, having been CEO of both of them. And we kept the band together. Everybody was happy to keep working together. And we decided to call ourselves Oxygen Capital and put our own capital and resource and human capital together to create the next generation of companies in our group. And we've done that now. So True Gold was one of those companies that came out of that next generation. We built a gold mine in Burkina Faso, sold that to Endeavour Mining in 2016. Pure Gold was another one. We just hit, or on the verge of hitting, commercial production in Red Lake, Ontario, and one of the highest grade gold mines in Canada. Liberty is in Idaho in the Great Basin with a big open pit Carlin deposit that Cal Everett's running. And it's looking really, really exciting. Discovery Metals is a big silver deposit in Chihuahua, Mexico. It's a true tier 1 asset for sure. It's got, I think, 1 billion tons of resource and growing. And our newest member of the family is Northwest Copper. And I've just signed up as executive chairman of that, having put 2 companies together to create this new vehicle. And we've got a very, very exciting portfolio of high-grade copper gold deposits in BC.
Great summary.
Thank you.
Interesting, because when most people think about exciting metal or exploration, discovery, and mining companies, they don't necessarily think copper first off. A lot of people think right away to gold and silver and perhaps uranium, but copper has been just leading the news for the past quarter or so, maybe 2 quarters, among the field of those in the commodity market. Rick, this is something you watch very closely. Can you talk to us briefly about this commodity super cycle, as it's been called, why you believe it's part of our near-term future, why it's going to be a big deal, and why copper, what role copper you think plays in that story?
Great big question. I'll do my best to keep it within the confines of the time we have available to us. I would say that the commodity cycle has really 3 components. The first is simply the ascent of humankind. There are something like 7.7 billion people on Earth, and every day there are more of them. And those people want to eat, they want to drive, they want material things in life, and everything that isn't grown or mined isn't, in fact, material. So simply the increase in population growth, but at the same time, the increase in wealth globally, particularly the increase in wealth among the 2 billion poorest people on Earth. 1.2 billion people around the world don't have access to electricity. 2 billion people don't live the way that we want to. And they all want to address that. And in fact, mercifully for humankind, the ascent of the bottom 2 billion people on Earth has been very rapid. And the consequence of that is that in aspiring to our material lifestyle, they use more stuff. So there is consistent demand growth for, if you will, Malthusian reasons. The more important component from my point of view is the supply side. I would argue that as a society, we have underinvested and misinvested in exploration and development for natural resource commodities of all styles for at least 3 decades. That isn't to say that we haven't on occasion invested a lot of money, but we've often invested it poorly. In Toronto, as an example, the value creation mechanism is too often rocks to stocks and stocks to money, which is to say that money is spent to generate news releases rather than to make discoveries. But truer still, on a broad basis, we haven't invested enough worldwide to maintain the supplies that enable us to live the way we do. Mark could confirm this, but most of the major copper deposits that we are exploiting today were discovered when I was younger than he is today, which is to say a very long time ago, and are very long of tooth. Things like Escondida, 35 years ago, Chuquicamata, 110 years ago, Ertsberg, 40 years ago. These deposits, Donegan, are long of tooth. You do not stand at the top of a copper mine, throw in water and fertilizer and have it grow more copper. That's not the way it works. And we have not explored sufficiently, and I'm not just singling out copper, but you use the example, so I will too. We have not invested enough money over time in exploring for new copper deposits. In the time that I've been in the business, the average mined grade for copper worldwide has gone from 1.6% to below 0.5%, which is to say that we are grade challenged and we are size challenged. At the same time, if you find a copper deposit in a jurisdiction that's, let's say, troubled by the rule of law, the ability to permit that project and put it in production after you found it is torturous. There's a wonderful deposit in the United States called Resolution, discovered about 20 years ago, I think, well over 1 billion tons, 1.5% copper, great deposit, deep. I don't think it'll be permitted for 10 years. Then, if it ever is, then the current owners will have to pony up some amount of money, like $6 or $7 billion, spend 5 or 6 years putting it in production. If we have a shortage anytime in the next 15 years, that mine won't be able to address the shortage. So the Malthusian reasons, which is to say demand pull, helps the copper price. Supply shortages, I think, will drive the copper price. And now with inflation, the incumbent producers will have a superb advantage because the replacement cost in inflated dollars will become increasingly prohibitive. So it would appear to me that we're beginning to have something that looks like a replay of the year 2000, which is to say inflating costs, increasing demand, and constrained supplies due to underinvestment, the perfect storm, if you will.
Mark, your perspective as you look at the sort of the, Rick has always told us to watch for people who are serially successful and that it doesn't happen by accident. It happens because of the people with whom they surround themselves, the approach and the attitude that they take, the work ethic, et cetera. Can you talk to us about within that backdrop, within that environment that Rick has just painted, and you could, if you have any other aspects that about that you want to add on to or subtract from, please feel free. But also then if you could talk to us about why you have believe that you've enjoyed sort of this legacy that you've been building of serial successes, and people who attach themselves to your wagon tend to go places that they're glad they've been.
Okay, sure. Yeah, I mean, I'll pick up where Rick eloquently outlined. I mean, it's. I think he touched on a lot of really relevant, great points, well articulated. That's for sure. I think one thing that's poorly recognized out there in whether it's society in general or even the investment community is that we're in a cyclical business here with peaks and valleys. And one of the fundamental structural problems of our business is that the peaks and valleys of production of any commodity, whether it's gold or copper, do not coincide with the peaks and valleys of the commodity price. Okay, so periods of peak production in gold, for example, often correlate with periods of low gold price. And mines get high graded and struggle to survive, et cetera. And then in periods of, the inverse is true, right? In periods of low production, commodity prices are high. And so you end up with this incongruity, right? This tension between that's really a reflection of a lag in supply response. And that is really related to structural problems with our permitting system, right? And so, well, it takes time to find a mine, make a discovery. Then it takes 10 years to permit it. And by that time, your commodity price has fallen or readjusted, and you're kind of just out of luck in terms of timing. And so all of that, I think, comes back to this cognitive dissonance that exists in society today between where our stuff comes from, right? It's like the smoker who got so tired of hearing about how bad smoking was for his health, he gave up reading. You know, like.
Wait. I've got a corollary to that. I can't resist. Somebody, we've been trying to get ready to relocate to a new location, and we've had to thin out our possessions. And somebody said that the secret to that is a book about how to declutter your life. And it said right in the book, it said, you go through your whole house and anything that does not bring you joy, throw it out. So he says, so I threw out the book.
Exactly. I don't want to know how cluttered I am. Exactly. So people don't know where their phone comes from, or their food comes from, or their electricity comes from. And so there's a fundamental disconnect with the supply chain, right? And we are ground zero of that supply chain, right? And until that's acknowledged and supported by government, by regulatory agencies, by society at large, we're going to have this decoupling of timing, which leads to these structural breaks in supply demand.
And in that environment, so you've added that additional dimension of this time cycle, this impedance mismatch between supply and demand, and how that causes the strains of under supply. In fact, when even Keith Neumeyer was on, he talked about the coming tremendous metal shortage. Rick was part of that conversation as well. Could you talk to us about what you have done and the companies that you are currently working to lead our way through this situation as it's been painted? So we've got, Rick says we've got, burgeoning need, we've got constrained supply. So what are you doing about it?
Well, I'm doing my best to find more metals, right? And so I focus in the group of companies and the people that I'm surrounded with who are very, very talented. We really focus on two things. We focus on timing, and we focus on location. And so from a timing perspective, we have really over the last 20 years focused our efforts during periods of unpopularity in a commodity cycle, whether it's gold or copper, to acquire as much as we can, right? And when nobody wants this stuff, and Rick would know this, I mean, he's the epitome of counter-cyclical investing, right? When nobody wants these gold deposits or these copper deposits, we're buying them, we're optioning them, we're joint venturing them, whatever we can do, and then de-risking them until such time as they are popular and we're in a position to serve them up or take them to production or sell them or what have you. So getting that timing right is vital. And I think we've done a really good job with that over the last 20 years. And the other thing is location. And so getting a project in the right, not only geological location, but geopolitical location is part luck, but part by design. And it's always changing. It's not a static thing. An area can be a great place to work 1 year or 1 decade and terrible the next. So you do your best at finding projects that are well located. If you look around the world today, there are about 2.5 billion ounces of gold and over 1 billion tons of copper metal tied up in deposits in the wrong places. And you don't want to be another statistic with your deposit tied up in the wrong place. And by the wrong place, I mean, they're not in production, not because of any price sensitivity. They're on the sidelines for reasons like water or biodiversity or tailings issues or poverty or infrastructure, whatever, all these things that can't be fixed with price or money, right? And so we try and focus our projects on in locations that actually have a mining history or a mining code. And it's never easy. It is never easy. And you never get it right all the time. But we're in the Great Basin in the United States. It's produced 150 million ounces of gold. It's home to the big Carlin deposits. There's a culture there that understands mining. We're in Red Lake, Ontario. It's been mining continuously for 100 years. We got our mine permitted. We're up and running. We're in Chihuahua, Mexico. It's a mining mecca, right? It's part of the DNA of the place. And we're in British Columbia now, which is experiencing its own renaissance of mineability and permittability, with the entrance of a whole suite of new players from Newcrest to Newmont to South 32 to you name it, right? And so we think we're in a place in BC where we understand how it works. We can work with the regulators and get our project permitted. So, I mean, that's a long answer to what was probably a simple question, but so I think looking at the world through those two lenses and focusing on them gets you farther ahead than you would otherwise get. And underlying that, you do need grade, right? And so I said that a lot of these problems are not solved by price. And I don't want a project that relies on some future price of the commodity to work. I want it to work in the context of the environment we're in today. So that means you need a high grade deposit, or one that's certainly above the average grade, which we have in all 4 cases.
Rick, in the past, you've talked to our viewers on several occasions who want to reduce risk for their family's financial future. You've talked about maintaining dollar liquidity, maintaining bullion liquidity, and then emphasizing in the current environment a participation in natural resources. And within natural resources, you've talked about kind of this progression of big flagship name producers versus royalty and streaming companies versus exploration. And exploration, I think, has been under-discussed in our conversations. Can you talk to us about why that's important in your view?
Yeah, greatly under-discussed. It's interesting, Donegan, when I review interviews that I've done with you, I emphasize investment over speculation, which is amusing to me because all the money that I now invest sagely, I made by speculating wildly. In fact, if you look at my own portfolio, which I encourage people not to do, what you'll find is I'm a bit of a believer in Nassim Taleb, which is to say that my own portfolio is a barbell. On one side, I have very, very low risk assets, cash, bullion, bank equities where I'm intimately involved in the management team, companies that are selling at well-capitalized companies that are selling at what I believe to be discounts to intrinsic value. And on the other side of my portfolio, I have some optionality, which is to say I buy deposits in commodities that are out of favor, knowing, I guess, that the commodity price will increase. But I'm an investor in intellectual capital. People that buy mining stocks, junior mining stocks, exploration stocks, make a huge mistake. They think that these are asset-intensive businesses. They're not. Most exploration ground is an option on losing money. When I went to university, a 1 in 3,000 chance at a 10 to 1 return. These are intellectual capital businesses. It's the people that develop an exploration thesis and test the thesis that teases the mine out of the rock. Exploration has been enormously good to me because for every 100 opportunities that are presented to me, I refuse 99. If a bunch of rocks doesn't have very smart people who I know and trust and love standing on top of them, I'm happy to pass. It's important that when people look at the exploration business, they don't think of it as an asset-intensive business. That's what gets you excited, right? You go to a mining conference and some guy shows you a bunch of maps, or better yet, some pretty girl shows you a bunch of maps. And they say, this thing was first looked at 100 years ago, and if the mule hadn't died, the prospector would be a billionaire, all that kind of BS. You really need to analyze these things the way that you would analyze a pre-revenue research and development company working on a molecule in biotech or an algorithm. And you think about the business plan that's presented to you. You think about the way that the unanswered question is being asked. You think about the value of a yes answer versus the probability of a yes answer. But most importantly, you think about the resume of the person asking the question. Should I care what this person thinks? Should I care for the proposal by which they plan to answer the unanswered question? If you do that, if you understand the exploration business for what it is, it's a truly spectacular business. And if you don't do it, you will join the hundreds of thousands of losers who have blown themselves up in exploration speculation over decades. It really is that simple. It's a wonderful business if you do the work. And if you understand that at its core, it's an intellectual capital business, not a physical capital business.
I would add to that one of the key ways that we have as a group, and we've got incredibly talented geologists and scientists backing up every one of our companies. One of the ways that we have tried to reduce risk, because this is inherently a risky business, as Rick said, is similar. Like a good analogy would be the commercial real estate business. Not that I'm an expert in that in any way, but oftentimes it's the second or third group who touch a project that actually make the money or get the win. The first group went bankrupt, the next group got, the cycle wrong, and the third group stepped in, acquired it, and made a go of it. And so the same thing can happen repeatedly in the mining and exploration business, where you pick up an old asset that has legs, that has all of the look and feel and smell and taste of an ore body, but it didn't work for one reason or another, and rediscover it. So rather than grassroots discovery, where you take a piece of moose pasture that's never been drilled and you make a virgin discovery, that's all great and exciting, but hardly ever happens. You're much better off rediscovering a mine or a project that had some historical legs to it. And that's really where we've had almost all of our success as a group. So you're standing on the shoulders of all that sunk capital, all of that intellectual capital that was surfaced, and you're reinterpreting it, looking at it with fresh new eyes, and in the context of new technology, and seeing what's there. So that's one key thing. And then the other, I think, discipline that needs to be you need to surround yourself with is you just cannot fall in love with a project. You can't. You cannot do it. It's a kiss of death, right? And so failure is going to be part of your everyday life. Failure is expensive, and sort of postponing that failure is even more expensive. So, fail quickly and make your decision and move on.
One of the things that your new company, Northwest Copper, is doing is basically got in a situation, I understand, where there are both a high concentration deposits right near a very sizable deposit and some processing capability right in that same area. And it's all within this safe and mining friendly jurisdiction in Vancouver, British Columbia area, in British Columbia, excuse me. And can you talk to us just a bit about that new combined project?
I'd love to. Yeah. So Northwest Copper is the product of a merger between two public companies. One was called Sun Metals and one was called Serengeti. And the industrial logic behind that merger really is the fact that each one's flagship project shared a claim boundary. So we were next door neighbors, and we were looking at each other through, across the hill down into the valley. And as we were looking at each of our destinies in terms of how can we grow and become more relevant in our space, it became clear that each one of us had what the other one is lacking, right? So Sun Metals had high grade. We made an incredibly high grade discovery. And our discovery hole was 100 meters of 5.3% copper equivalent. It was probably the best hole drilled in North America that year in 2018. And we sort of proceeded to drill that out and ultimately just published a resource on it of just under 8 million tons of 2% copper equivalent. So it's a nice high grade, very rich deposit. And it's sitting right next door to Serengeti's Kwanika deposit, which was discovered 15 years ago and was sort of languishing and needed a path forward. And our view here is that by combining the heft and critical mass of Kwanika with the high grade of Stardust, you've got a project that looks a heck of a lot better on a combined basis than any of them did individually. And sitting within Kwanika is a very poorly understood to the broad market core or domain of 1% copper equivalent material. So even within Kwanika, there is a high grade core that is incredibly complementary to Stardust as well. So this is a a relook, a reimagining of two projects that already existed, and really sort of appealing to the word synergy at work, right? Which is the whole is greater than the sum of the parts. And we believe that to be true here.
Rick, as you have looked at the future of this economic cycle that we're in, whether the commodity super cycle or you've talked to us in the past several times about being in the early middle innings of a precious metals bull market, that sort of thing. How do you see the commodities cycle playing out? I know you don't think that talking about a strict timeline is the best way to talk about it, but what are the dynamics that you see that are going to keep driving that? And maybe that just gets back to what you were talking about, population and resource demands and that sort of thing.
Well, certainly the resurgence in commodity prices since the COVID-19 interlude has surprised me. My own personal belief was that as a global society, we needed to work off the excesses of the liquidity-driven economic recovery that we experienced in 2009 to 19, and that also we needed to shake off the cost of the economic slowdown of the COVID-19 crisis. I underestimated, as I have for my entire career, the near-term positive impact that quantitative easing, which is to say counterfeiting or liquidity, has on a global basis. And the copper price and the oil price and all these prices have run much more quickly than I had anticipated. I expected that we would see $4 copper in 2024. I was delighted to be wrong, of course. I'm concerned, frankly, about commodity prices in the very near term, but I have no concern in the 4 to 5 year time frame, because I think that we have supply shortages to deal with that we needed to address 20 years ago, and we didn't address them. In other words, I believe that fundamentally strong industrial materials prices are inevitable. I didn't understand that they were imminent, and I'm not sure in the next 12 to 18 months that these prices hold. Frankly, I'm unconcerned. There are a lot of people in these markets who seem to have trauma holding stock over a long weekend, and they believe that their time frame is somehow relevant to the copper cycle. It's ironic at age 68 that although I don't have too many more 5 year periods left in this mortal coil, I've become much more patient. The idea that something is inevitable to me is extremely attractive. And so, to answer your question, I have some near-term caution about commodity prices, which isn't deterring me in the least from investing in high-quality exploration efforts or high-quality producers. Warren Buffett famously says that being afraid of share price declines is like being afraid of night and day, that they're going to occur. He goes so far as to say that you shouldn't buy a share of stock if you wouldn't be delighted to see it fall 30% in price so that you could buy more stock cheaper for expending the same amount of intellectual effort. Now, Donegan, I've done this dozens of times in my career. I could tell you it wasn't unpleasant when it occurred, but it was pleasant over time. So in direct answer to the question, I believe that we have a commodity super cycle ahead of us. This may be a false start. It may be not be a false start. But frankly, from a logical point of view, it doesn't matter. It doesn't matter particularly at this low interest rate. Net present value calculations, if they're done at a discount rate around the US 10-year Treasury, almost don't exist. This is a wonderful time to be patient about the inevitable. Many speculators don't do that, which is, of course, to their loss.
Let me see if I understand in a nutshell. Are you saying that for those who are not only expecting, but maybe needing, but based on the position that they've taken, of an immediate and forceful and follow through and sustained runaway in commodity prices right now, you're saying that may not be what's coming. What's coming may be
somebody who has a need of immediate is somebody who has a need of what they're very unlikely to get. What those people need to do is take a nap and give their head a shake. The idea that you can have a proximal event that is certain is fantasy. It's simply fantasy. The fact that you want it is interesting, but it's not particularly relevant. You need to organize your life about what's probable to be able to have. Sorry to be so harsh, but
No, people look for your experienced judgment and your experienced wisdom as part of why they come here, seeking out your perspective. That's why we're here. Mark, as you look forward for your next phase of the projects that you're most keenly and intensely involved in, what are the bridges you expect to be crossing in the near future?
Well, I'll briefly touch on a few milestones from each of those companies. So Northwest Copper, we just announced our first drill program as this new entity. So that's underway. That'll generate a whole series of hopefully good drill holes over the course of the summer and fall and culminate in a PEA, so which is a preliminary economic assessment, which will give people a first ever look at what do the potential economics of this combination really look like. So we should be able to deliver that by year end or early 2022. On Pure Gold, we're on the cusp of declaring commercial production. So that's an event coming up in the next little while, which is very, very exciting. And I would add that, our group at Oxygen, since 2016, which isn't that long ago, our group has delivered 3 operating gold mines to the world. Right? So in 5 years, Oxygen Capital is responsible for 3 of the new gold mines that the world has. One was built by Newmont and the other 2 were built and financed by us as a group. So I think it's a statistic that we're very proud of. At Liberty Gold, we're about to put out a resource and a preliminary economic assessment as well and give the world a glimpse of what black pine really looks like. We're very excited about that. And we're going to do the same thing at Discovery. So we've got this incredible silver project called Cordero in Chihuahua, Mexico, and we're going down the same path on that as well, which is a resource and a PEA to give people a great complexion of the economic viability. So it's been an incredibly busy year. I mean, it's hard to imagine that we've just come through a year, but an awful lot of milestones have been met. All of these companies have advanced their projects seamlessly, and we're delivering on our promise of creating value through de-risking.
Yeah, it's hard to believe a lot of us have been through this past. It doesn't feel like a year. It feels like a decade to some people. A lot of our sense of time is completely disoriented. Rick, as you look forward to this space, you've mentioned us in the past that it doesn't hurt your feelings to see people having at least 20% natural resource exposure in their portfolios. And I'll invite you, as we often do, if you wish to re-up your offer to rank people's their natural resources portfolios for them.
happy to do that. As many of your listeners know, I like to engage in conversation with them. The easiest way is to start with something that they're interested in, which is to say their own fortune. Any of your listeners who want to have my opinion on their resource stocks can go to a website, sprottusa.com/rankings. Enter your natural resource stocks. Please, once again, no pot stocks, no cryptocurrencies, no technology stocks, just your resource stocks. I'll rank them 1 to 10, 1 being best, 10 being worst. Understand these rankings are snapshots in time. One drill hole can change your ranking, but it's a snapshot in time. I'll also comment on individual issues where I think my comments might have value. And for those listeners who care, if you mention charts, I will include in my return synopsis a 50-year chart of the major precious metals mining indexes, the best long-running chart I know, but wonderful for examining the anatomy of bull markets and bear markets. And I'll include a 100-year Goldman Sachs commodity chart that talks about just how cheap industrial materials are relative to other financial asset classes going back 100 years. Once again, sprottusa.com/rankings.
And Mark, if we could let you have a chance to tell people how they can find out more about Oxygen Capital in general, and perhaps Northwest Copper or any of your other companies in specific.
Sure. So we go to our website, oxygencapital.com or northwestcopper.ca. In fact, you can go to Liberty Gold, Pure Gold, Discovery Silver. We just changed the name, and northwestcopper.ca. Any of those websites will get you in touch with either me or communications people or the CEO of each of those companies. And I would like to thank Rick for all of your support over the years. It's good to reconnect again. This is our second interview together in a year. So it's
thank you for making it profitable for Sprott and Sprott's clients.
My pleasure.
All right, you two now break it up. Rick, I forgot. You got the 2021 Natural Resources Symposium coming up. Could you please let people know what to expect there and why they don't want to miss that for sure, coming up in the middle of July 15th?
Well, they don't want to miss it for a whole bunch of reasons. I would argue that after 27 years, the Vancouver Natural Resources Investment Symposium is the single finest retail high net worth investment symposium on the planet. It's been in existence 27 years. This is a virtual edition this year because the Canadian government won't let us filthy gringos across the border. But we learned a lot about virtual conferences last year. We have a wonderful range of speakers to talk about the world as it is, as opposed to the way the big thinkers ought to be. Importantly, every exhibitor at the conference is owned in a Sprott performance fee generating account, meaning at many conferences, the exhibitors are regarded as advertisers. The qualification for entry is a pulse and a check that cashes in reverse order of importance. Our attendees have told us that the exhibitors are content too, and the consequence of that is that we know them all well enough that we have our own money invested in them. That's very important. The final is that I make it, in effect, riskless for the attendee. If you pay the entrance fee and you don't think you got your money's worth, email me and I'll give you your money's worth back. We've done that for 20-something years. I think 2 people have asked for their money back. Please don't abuse it. Please don't try and show up for free. But if you come to our conference and don't think that it's been worth your time and treasure, email me. I can't give you your time back, but I can certainly give you your treasure back.
And I'm also looking forward to being there. I'll be in the Miles Franklin Precious Metals Investments exhibitor booth, and anybody who wants to come in and do a face-to-face chat, that's all possible in this virtual conference format. Instead of being across the table from each other, you'll be in your pajamas and I'll be in my suit. So look forward to seeing you all there. And that's the 2021 Natural Resources Symposium, July 15, 16, 17. And gentlemen, just thank you very much for taking the time to come together. Our audience really appreciates getting multiple perspectives on what's coming, what we're going through. It's been a confusing year. It's probably going to be confusing going forward, but we're glad to have those of you who are on the inside of a lot of insight into what's going on here on our corner. And we just appreciate you both coming here on Liberty and Finance. So Mark and Rick, thank you so much for joining us.
Thanks, Don, again.
Thank you, sir.